All right, everyone. So we're going to pick back up here with Chapter 10 on time and sales, and this is where Level 2 and time and sales, they come together because, as I said yesterday, reading Level 2 in absence of time and sales ultimately is fairly difficult. So as you can see here, we've got our Level 2 on the left, and then this is our little teeny time and sales window, which by itself is enough because that communicates to us every single print that's going through the current market. So it by itself is critical. Now, reading Level 2, also, as I said yesterday, although it's not a requirement to be a successful trader, my last trade on OXBR here, just for instance, I bought for the first 5-minute candle to make a new high right here. So the entry was around 470 or something like that. The high of that candle was 480, and I got in just a little early to anticipate it, with a stop at the low. So our 5-minute chart on the left showing a nice clean volume profile ramping up, bull flag, first 5-minute candle to make a new high, and actually the probably nice entry on this was right around 65, right about there. Okay, so on this one, since I knew the place I wanted to be a buyer, which was the first candle to make a new high, I could have simply just pressed the buy button there, which would have required having some type of order entry window. So if my order entry window in that case was, just like this, well, that would have been adequate because I knew I wanted to get in at 65. But, obviously having the Level 2 would make more sense. If you were using software, and TD Ameritrade will allow this where you can trade right off the chart. So you can click the buy button kind of right here without even seeing this. Remember, of course, that TD Ameritrade's platform is a little, it's a little unique. It's very unique, actually. It's very different from kind of like any other trading software. But in any case, for most day trading platforms like the simulator and things like that, you're going to have a Level 2 window. So you might as well understand how to read it. But yeah, if the entry is at 65 and you have your stop down there at 18, or maybe you move it to 25 or whatever, as it goes up, you're just kind of saying, okay, when it goes up to 90, I press the sell button. So you may not be needing to use Level 2 necessarily to do these really quick breakout trades where as the seller comes down, you try to jump in and then take quick profit and jump out. You can do that, but you don't have to do that. Now, before we get in to the class today, let's see. Is Uncle Steve with us today? I think he is. I hope he is. So, because this is a little bit of a, this is probably the most advanced concepts of the Warrior Starter course, Level 2, time and sales, and then reading the time and sales. And then getting into Chapter 11, which is on stock halts. This is a good time to give ourselves a little bit of a boost to try to get through it. So it's actually a fact that if you have something to eat, these are some dried pineapples, or something kind of sweet, that can help make you a little bit more receptive to new ideas, put you in kind of a good mood. So if you ever have to ask your boss for a raise, not a bad idea to do it over a cup of coffee. If you ever have to tell your Uncle Steve that he should really start thinking about getting back on that Rogaine regimen, doing it over a dried pineapple is not a bad way. Maybe he'll be a little more receptive to this idea. And let's take a look at a cool video here, which shows someone's complete mastery of a skill, just like when you were watching me skiing yesterday. Let's see. So this is another music video here. All right, so let me get this on audio, and I'll turn this up on this mixer, and let me play this, and let's see if the sound comes through on this okay. Oh, looks like I've already got music playing. Okay, I'm gonna mute that, and I'm gonna play this one. And that's Tim Reynolds there on the left of the screen. He's an incredible guitar player. Makes it look easy. And maybe for him, at this point, it is easy. Look at this. Regardless of what you think about the music or the musicians, the talent is really what we're looking at here. And it's unbelievable to me. Of course, there's so many people in the world, it makes sense that some people have really amazing talents. And I suppose for me, one of the talents that I have is reading level 2 and reading charts, tape reading. Now, one of the things with trading that's, kind of challenging and probably frustrating is the fact that, it's hard, and same with being a musician, it's probably hard to get very far being just a mediocre musician. The amount of practice it takes to get to being, really good, it's just such an investment in time to get there. And with trading, it's kind of similar in that some people might say, "Oh, I'd be fine with just being I'd be fine with just being a part-time trader." And while that may be true, the problem is that, it's like, "Oh, I'd be fine with just being a part-time professional snowboarder or a part-time professional skier or a part-time professional musician." Well, by the time you're actually at a level that's good enough to actually, be successful at it, you've put in essentially the same amount of effort as someone who's doing it full time. So it sometimes feels that it takes that full-time commitment to really learn the skill. And if you choose to only use it part-time, then you're kind of selling yourself short on what you could be doing with that skill. So with trading, putting the pieces of the puzzle together from the very beginning of the starter, where we were talking about general financial goals and your daily, how that translates down to your annual goal, your monthly goal, your weekly goal, and your daily goal, and then getting into understanding what constitutes the right type of stock to trade. And then once you identify the right type of stock to trade, say OXBR, or COS or any of the others you see that I trade today, and I actually traded OXBR in this account here, because as always, I trade both in my retirement and my main account, so I get some spending money and then some that saves for long term. But in any case, the fact is that once you find that stock to trade, then being able to find the right entry points, and then roughly the right entry points, which is based on the chart, and then being able to pull up your order entry window and being able to say, okay, this is where I'm actually going long. This is what I'm seeing that's giving me that final confidence to pull the trigger. So we start at that high level, and then we come narrowed all the way down to that spot where you say, okay, I'm pressing the buy button right here. And as a day trader, we often are down to pretty much the penny as to where our entry is. We know the first 5-minute candle to make a new high. If that's 480 is the trigger. And so then perhaps we take an early entry, but we know the levels very precisely. And that's certainly different from people who are long-term investors or sort of passive traders who are, take a stab here or there, but then they'll add a little more later, and they're not probably looking at level 2, but they're also they're not coming at it with the same goal of trying to produce consistent revenue. So just on a side note, sometimes I have seen over the years traders, who come in and will, throw down huge numbers. And, something like, I'm trying to think of a good example, but, well, even GameStop. I mean, this incredible move on GameStop and all the excitement on Reddit and everything else. A lot of the people that have been trading GameStop, they have full-time jobs. Trading is not their livelihood. This is just it's like a fun hobby, which is, investing can be a fun hobby, and there's nothing wrong with that. But think about how the mentality changes of, oh, I can put $1,000 into this and I'll just hold it for a month. I don't, hey, if it goes up to 10,000, that's awesome. If it goes down a little, that's okay too. And so sometimes because they don't really need to generate that income, they can afford to be a little kind of looser with the trade of, oh, it had a really nasty dip, but they hold through it. Or, it ends up going way, way high and then giving back half of the gains. And, they still hold it because maybe then the next day it goes back up. And that can feel frustrating because you feel like, boy, look at this person who doesn't even probably know what level 2 is, who probably doesn't even know what a shelf registration is or what the volume weighted average price is. And they have made more money than me. But a lot of times those are on long shot kind of trades, and realistically turning $1,000 into 10,000, doing something like this, for every time they might try to do something like that, probably 8 or 9 other times they're going to have trades that are just sideways or even go red. And in the meantime, when I've been actively and aggressively trading small accounts, I've proven that I can grow those small accounts much faster by getting in and getting out. And so try not to compare yourself too much to some of the others out there who, even in the chat room perhaps, we have traders in the room who have come in who already have 6-figure full-time salaries, or even, have 7-figure accounts. And they come into it with a very different risk tolerance than someone that has a smaller account. So they may be able to just afford to hold something overnight that went red on them. And I don't think that that's generally a good strategy or a good practice, but, for them it might work. And so you always kind of have to try to set the level and benchmark against your own performance and really what your own goals are, and try not to get into that habit of comparing yourself to others. So with that said, let's go ahead and get into chapter 10 on time and sales. So here we're going to talk about tape reading. And, for those of you that don't know, in the older days, we had these, what were called ticker tape machines. And we'll see, ticker tape machine. I'll see if I can just grab a picture of one for you. So this is looks like this is one here. Let's see. So I'll just put this like that so you can kind of see it. So this is a ticker tape machine, and a machine like this from the 1800s all the way through the 1960s were used to receive stock market quotes. And you could have one of these in your office, and you could get quotes from the market. And so there's 2 little wheels. There's the roll of tape, which is the roll of paper right here that you see. So we've got the roll of paper, and then there's 2 lines of text, one on the left and one on the right. And so there's 2 wheels inside the machine. One is the alphabet, and it prints the symbol, and the other is numbers, and it prints the quote. So you can constantly, in those days, be actually getting, pulling the tape and seeing what the latest quotes were. So in the movie All the Money in the World, about, what was it, Getty, he had in his living room a ticker tape machine, and, rather than talking to his, son or whatever, he was just staring at the ticker tape and just watching it as it was rolling out. But in fact, in the older times, that was how traders got the latest quote from the market. So that's where the expression of tape reading comes from. And as I mentioned, I think earlier in the class, that's where in those days you would get the quote, and you would have to sort of interpret what the chart looked like based on the quote, because you didn't actually have a chart. So you were really trading based on the tape, based on the last quotes. So we still have tape, and we call it time and sales. And as you can see on that window there, so right here it's connected inside in light speed, but I can go in here to display, and I can turn off, or design and turn off those prints. And then I can just use a second time and sales window to have it side by side. It's kind of your preference which one you want to do or how you want to do it. I personally, and this is being a little nitpicky, I really like to have my my top quote right here lined up with the top of the tape. So this alignment here of not having to look up like that, but having it actually be side by side. So here, this actually works better for me if this comes down to here, kind of like that. But then it's kind of a funny orientation on your... Anyway, so that's why I just leave mine built in. But when the tape or time and sales is flowing, as it is on this stock here, we're going to see a whole bunch of data going through, different colors and everything else. And so let's go through that right now. So you can configure the colors differently, but the basic installation and when you set up this software, the way it generally runs is that a red order occurs at the bid price. We know the bid is here on the left. A green order occurs on the ask price, and bright red is an order that actually was below the bid, which means it was a market order that dropped the bid. So it was like sell off. And green, bright green, is above the ask, so that's kind of like a market order as it's surging higher, as you see in that block right there of green. White orders are between the spread. So if the spread here is 407 by 410, an order at 4085 is between the spread. So how does an order occur between the spread? Well, it can occur in a couple of different ways. It could occur from someone buying and someone selling at the same moment and their order getting matched. It could also occur from someone actually having a hidden order, and we'll talk about that in a moment. So, and then orange orders are considered irregular, usually based on like 3 shares or 122 or 91, but only certain trading platforms show those irregular orders. Others would just let them be whichever color they would be based on everything right in here. So red, bright green, or white. And that's usually actually how I prefer to see it, because that is what's most important. I don't really care too much about the size of an order and what that, what that really is saying, or the fact that instead of 500 shares, it's 197. That just doesn't make a really big difference to me. So let's see. I'm just pulling up my. I'm going to give you guys a couple of live trading videos here, which will give you the opportunity to sort of see the time and sales and the level 2 side by side and hear my commentary of how I'm reading the tape. Are there any questions specifically on this right now? And I'll just ask for those that are streaming in hopes that if you have a question, maybe it's a common one, that it would help those watching the recording. Doesn't seem like there's any yet. If I go into settings here, let's see. Or actually, sorry, if I go into settings right here, this does give me the opportunity to add the market if I want to see the market. The style, good and bad. Again, if you had a color issue, you could change those colors to stand out more, but this is the default style. So by adding market into this will now show me which route the order took place on. I don't usually look at that because it doesn't really make a huge difference to me which route it goes through on. It's just not that significant. And actually, this is sorting from bottom to top, which I do not like. So that I would have to, let's see, I'm going to show header and click on that so it starts sorting the correct way from top to bottom. Actually, it doesn't, I can't tell. Anyways, it's moving to, there we go. There we go. Okay. So let's see. So in Thinkorswim and TD Ameritrade, yeah, the tape is a little different. I'm going to have to log back into my TD Ameritrade account here, 1 second. So we've got light speed right there, and you can see the white, the red, the bright red, and the bright green. So these are bid, ask, there's one below the bid, there's one above the ask. Now if I go into the simulator or Sterling software right here, again, on this we can go in and we can go to the settings and we can include the market if you wanted to see the market, and you can go into the colors here and you could change them if you wanted to. It actually looks like this right now is the same for at and above. But it's possible that your settings are slightly different than mine. I'm not sure if I have the latest install. So let's pull up OXBR. So you can see how the tape here of these two, between these two data feeds is quite similar, but then the color changes the way it looks a little bit. So I think what's most important for me is making sure that I can very clearly see the strength when it's strong or the weakness when it's weak. So maybe having the colors stand out a little bit more would be helpful. Well, that's probably not standing out quite enough. But in any case, it's just sort of finding what's a good balance for you and what you're able to see well. All right, let me see if I can get logged into my TD Ameritrade account. TD Ameritrade's a little slow to open. So, so what we have here is, you know, a very similar tape, which is, I have it stretched out to make it a little bit bigger. A question someone asked yesterday is how many rows I usually like to have. I mean, having a nice block like this is actually quite nice. I don't have that set up in that way for either of the sterling. When I've traded in sterling, it's been exactly how you see it here, which is adequate. So how many rows is this of data? 2, 4, 6, 8, 10, 12, 14, 16. Now over here, when I have the display prints on, we don't have as much. We only have, let's see. So looks like 2, 4, 6, 8, 10, 12. But, you know, I've made do with it for quite a long time. And essentially, it just shows me what's currently happening at this moment, which is good enough. So you don't need to have a whole, you know, huge roll of the tape in front of you, the time and sales. But you could add more if you prefer. It's not going to hurt you, but it's just a space issue of how much space you have. So again, this is an area where I kind of like, in a way, the way this is set up here with TD, or sorry, with sterling. Over on Lightspeed, just to bring this up here, what I'm not as big of a fan of is the way this this order entry window is so huge. And you can make it a little smaller, but not a lot smaller. You know, I mean, if you make it too small, then you're kind of not seeing important stuff. So yeah, it's not perfect. So I could do something like this. I could go in here to prints, or right here, take those off. I could shrink that down to like there, but then that's too tight. You know what I mean? So it's like, that's not quite right. I can't fit the level 2 in that tiny window. That's not going to work. So it's just kind of figuring out the best way to run it for whatever software you're using, and then just being okay with that. Okay, so now that we've talked a little bit about reading the tape, let's go ahead and grab some live trading archives. All right, so here we're going to have a live trading archive, and this is on, and we've already watched this one a couple times, but I think now this will, again, help fill in the blanks a little bit with more context. One thing I would note is that, as it turns out, this chart was sort of hanging over my level 2, or my time and sales here, but you can still see the price. The size, I just don't really look, honestly, I really look at the color more than anything else. I don't look closely at, the price. I just look at, and I don't look closely at the share size either. Let's see, hang on one second. There we go. All right. Okay. So let's play this. All right. So on this one, and again, just to kind of set the stage, I know we've done this example several times, but each time you watch it, you're going to gain a little bit more. So, and one thing that I maybe didn't mention, I don't recall if I mentioned this in the starter class yesterday on level 2 and on order entry. I don't think I did. But this is a little bit more advanced. It's probably more of a Warrior Pro topic, but you can hide your order. So on a stock, I'm just trying to think of like a higher price, lower volume stock. This one's fairly low volume, but the spread's pretty tight. No, that one's cheap. I don't know. But in any case, you could put an order for 10 shares or whatever, and you could make it a hidden order. And then you could, so let's see, 109.35. So if I put my order at 109.40 right here as a buy order, it's between the spread. So my order right there, it did fill, but it was between the spread and it didn't show up, right? So it's not showing on the level 2. So sometimes if you put an order to buy and it's a hidden order, or you put an order to sell and it's a hidden order, it won't change what you're seeing on the level 2. And that can be a little confusing because you're like, whoa, I want to buy this stock. We've got a 10-cent spread here. So you think you press the buy button and you think you're going to get filled at 55 and you get filled at 45. You got filled at 45 because there was a hidden seller in between the spread. And when your order went through on the tape, it would be white because you bought from a hidden seller between the spread, not from the actual ask. So, again, this is a lighter volume stock. I could put an order here to buy or sell at 75 and I'd be right between the spread. And so it's actually, let's see, I'll just do it real quick just so you can see. So I put my order there, it doesn't change the spread. See? Spread doesn't change. And that's because of hidden order. Now, if I had this order as visible, that should show up. So let's see. I can't even remember how to make it not hidden. So 3,000. So let's just see. So right there, my order shows up. So everyone out there is now seeing that I've got that order there on the level 2. We're going to get into that in the Warrior Pro classes, why and in what instances I would hide orders and in what instances I would not or wouldn't care. But in any case, when we get back to here, what we're going to see some white orders. So we're seeing some orders going through kind of between the spread. We already know that we have a flat top breakout setup and 880 is our high that has been tested on 3 occasions. But every time we come up to that level, we have this big seller. So right there, that big seller is 96,000 shares on NASDAQ plus another 41,000 shares on EdgeX. Now, it's a big seller, but this stock also has 45 million shares of volume today. So it has so much volume that, at a certain point, I don't know that it, I'm not sure that it, the size of a seller starts to kind of become a little irrelevant, but we do recognize that that's 100,000 plus shares on the ask. So for someone to buy all of that in one order would be a pretty huge order. So you're going to have a good number of traders step up to the plate and buy as that breaks that level. But because we have a good 5-minute chart and a good 1-minute chart, we have a higher likelihood that that will break. So let's go ahead and watch this. So right there, see all that green that went through? Immediately, surge of green goes through, and as soon as it breaks, we see some red. That communicates to me first that you had a lot of people that pressed the buy button, and some people that even got filled probably a little bit higher than they might have liked. And then some people immediately on that breakout took profit, and they took profit by hitting the bid. So selling at the bid price. Now watch the tape. We're seeing a little mix of buying and selling. And now we're looking to see, is it going to break through 94, 95? It's a good amount of buying there. But you can tell that as it breaks, people are taking profit. So this is a stock that, while it's fairly bullish and is certainly moving higher, is also having some issues with people just selling as it goes higher. So when I sell, I'm selling at the ask price. So remember, if my order is up here to sell at the ask price, then I'm not hitting the bid. So if I hit the bid, then a red order is going to go through on the level 2 if I hit the bid. And so I don't really want to hit the bid, especially if I'm holding 10,000 shares and I sell half at the bid. Hitting the bid and throwing a red order there on the tape, that kind of hurts my existing position because anytime there's red, it's a little sign of weakness. So I'd always rather sell on the ask and force short sellers to press the buy button to cover because I don't want to hit the bid. If you're short and you're trying to get out, you might put your order on the bid because you have to buy to cover. So you put your order on the bid, you let it drop down. So I don't want to, so to speak, feed the bears, the short sellers, by hitting the bid. I'd rather force them to cover up on the ask, and so I'm going to put my orders on the ask usually. Now, sometimes I will, for whatever reason, just say, all right, I got to hit the bid, I got to unwind this. But you can see here, this is going higher. And when we really get into parabolic price action, which is when stocks are basically going straight up, that's when I'm going to be the most aggressive about selling at the ask price. So let's look at another instance here, or another trade. So this is ACY. All right, so we'll go full screen on this, and quality should increase in a second. So ACY right here, and again, my tape is partly covered by my chart, but we're mostly looking at the color. Look at, as this surges up here, all those bursts of green. So some red for sure. Look at green, a lot of green, and it's going right up to 818. So what's helpful for me is seeing the price moving up quickly on the level 2 and seeing that those orders are going through on the time and sales, right? We see that it's moving up and there's buyers coming in. So this is actually going to halt, I believe, at about 818, and I'm only holding at this point small size going into the halt. So we could back that up for a second. So this was a breakthrough volume weighted average price, which is a very bullish setup. So I pull up ACY. I know that the VWAP is probably around like 750. And I press my hotkey as Shift 1 to buy at the ask. So I'm buying at the ask at 36, 39, 41, 44, 45. And look at all these orders going through right now, 54, 55, 58, above the ask. That is very bullish. That looks really, really good. So this right now is looking great. There's 70. So right now I'm up almost 30 cents. Now I put an order on the ask at 72 to sell half. So my order was on the ask. I believe that was on the ask at 72. Another order at 69. That might have been one on the bid. I'm not sure. And then let's back that up to the quick add. Oh, we'll just back up. We'll just show the whole thing again. All right, so add long. That add long is based on the technical setup of the anticipating the break through 750, knowing that we're breaking the volume weighted average price. We break through 750, I'm up 30 cents. I take a little profit off the table. Now it's holding over the $0.50 of 750. I'm looking for green on the tape and an indicator that it's going to continue up to the next level of 8. Green right there, 75. Green at 75, and I'm adding. Now we have 8, green at 8. I'm taking a little off the table at 16 on the ask, trying to get the best price possible. I'm not feeding the bears. I'm wanting them to come to me. And oh, looks like we're about to get halted here at 818. Now, we never know, of course, how high these stocks are going to go. In hindsight, my 13,000 shares of this at 771 or whatever that was, I would have done better holding that for another 30 minutes. But let's go ahead and fast forward on this. So the halt time was, well, fast forward like 5 minutes. So we're waiting for resumption. It was halted at 16, so it should resume at 21 and 32 seconds. We'll get into halts in chapter 11 coming up next, but just for right now, this is halted on what's called a circuit breaker halt, and when it resumes, we're going to look for continuation. Stocks that gap higher usually halt going up usually open and continue higher. I'm moving my order up a little bit. Now this actually opened a little lower, which is unusual. But look at this, it surges right back up. And the spot that I'll be watching is over 818. So it looks like I tried to do a little dip trade on this here. We're seeing some green, a little red. There's some green at 76. It needs to get back over the whole dollar of 8. Green there at 55. Green, a lot of green right there, 85. So we're beginning to set up for the first candle to make a new high on what chart? The 1-minute chart, with the 10-second giving us that close-up view. That close-up view right here is the pullback, and now it's starting to curl off the low. If it breaks through 8, then we're looking for the break over 8, the high of 818. And it'll happen fast. Now, in this case, I'm taking a little off the table from my entry at 780 or my average at 780, which isn't a bad idea when something is extended and I've already been red on it. Looks like I only got a partial fill on that order, and so that's a good example of, with the hotkey, I didn't get my full order filled, and so I chose to cancel it, and now if I sell on the bid, I'm actually taking a 3-cent loss versus a 22-cent winner, so I'm just going to give it a second, but you can tell how as a beginner trader it may be easier for you to buy with one button and sell with the other, sort of essentially limit order 5 cents above the bid to buy and 5 cents above the ask to buy and 5 cents below the bid to sell. But I'm able to move quickly and cancel those, and so I'm just going to hold here. I'm still waiting for the first 1-minute candle to make a new high. What you see there is a distinctive pattern on the level 2, which is that clearly we have some resistance at 8. 8 is psychological resistance because it's the whole dollar, but we're having some resistance there. It's having a hard time getting back above 8. So I sell the rest of my position. On that one, I went ahead and hit the bid. I got filled at 69. And I might end up getting right back in. And I do. In this case, I get right back in. Now look at this. See how we had kind of a big wall right there on the level 2? So we see green right there, green at 78, 79, green at 80, green at 94, green at $8. The tape is green. You can see the countdown on the level 2 where orders go, 10, 9, 8, 7, 6 because people are buying those shares. And we rip now, we've got 18,000 on the ask for sale at 818. Now, that's a big enough order that I decide to go ahead and take some profit off the table. And now the question is, will it break? And oh my goodness, it broke that level with some confidence. Holy smokes. So now the question is, all right, where do I get back in? Natural to see some selling up here into that kind of squeeze. And there, my order's at 53 there. I just added at 53. It dipped, and as it curls back up, I add, and now looking for the move up to 9. Over 75 could be an add. Green orders there. I'm adding at 75, looking now for the move to 9. Okay, watch this. So I'm in at 65 now with 18,000 shares. Look at that. Now, once again, we have a little resistance at $9. So we're seeing a little bit of resistance at 9. Is it going to snap through that level? I've got a pretty big position here, so as it turns out, I'm comfortable adding. Wow, look at that. That's 926 on the ask. Now, I threw out an order to sell on the ask as it was kind of breaking through that level, and so right now my order's actually at 908. It just happens to be that the moment that I pressed the hotkey, that was the price. So my order is now between the spread at 908, and I filled that order in full, or almost, I filled 10,000 shares of it. Okay, so it's, as it turns out, a false break of 9. That's not uncommon, psychological kind of resistance there at the whole dollar. Okay, so, but we know our high was around 926 or something like that. That's a big pullback, for sure. That's a rejection off the whole dollar. So it's dipping down. So let's move a little further forward on this video. So, well, in this case, it dipped down to 35, and then it just kind of rallies right back up. Oh my gosh, look at that. 75, 80, 86, 90. Short sellers, they're not getting a break on this. This wants to keep going. It's a premature breakout. If it breaks over 9 right here, it's premature because based on the time of 10:24 24 seconds, we just have a red little topping tail candle. And I know that's a little hard to see, but we just have that little red candle there. We actually are not quite set up for a bull flag. And yet, if a short seller is going to get squeezed out, long traders buy that break, and I have a starter at $9. And I take it off the table for $300 of profit. New order goes to the high. Hands is on the buy button. Notice right here. So this is the road right in front of me. This is what I'm looking at when I'm actively trading and moving in and out of these positions, and then I glance at the chart. Again, it doesn't mean that you couldn't trade a strategy where you're focusing more on the chart, and in this, if you were going to focus more on the chart, you'd probably be focusing more on the 5-minute chart and slowing things down a little bit. But when you're trading aggressively as I am in this video, you're just almost definitely going to be watching the level 2 because of how quickly these stocks can move. So we're looking now for the break. I add there at 16. I'm thinking this is going to break through the high. There's 29. It's got to break through 30. There it goes. Well, look at that. And in this case, I added. So I'm being aggressive to add into this move. But I'll say that when a stock is up 245% and is moving this quickly, usually this is when I start to set higher, more aggressive expectations of $9.75, $10, maybe higher. So in this case, I'm unwinding some of the position. I'm certainly aware of the higher level of risk. It looks like that was a small loss. I put the new order up a little bit higher. It dips down again, kind of a hard dip. And then once again, it's going to rally back up. It's going to surge back up. And we know our high was around 970. So now we actually had the first candle make a new high. our 5 minutes extended. So if you were trading only on the 5-minute chart, you would say, oh, there's no opportunity to get in up here. It's up too high. But for us trading on a 1-minute chart and using the level 2, we may be able to find a quick little early entry. Maybe we'll see a big seller at 950. We could take the break through that level, and then we're going to look for a move up to 975. So what I just did there was I put a little trend line at the high of 971. So 971, that's the level that we want to see break. So we've got 60 on the ask, 58. And you can see how it's dropping down to 43 and 38. So this is feeling a little top heavy up here. It's not quite breaking as quickly as I thought it would, but there's a look at that. So we knew the high was 71. And you know what probably happened at that moment is there's some people out there that decided to cover a short position. And then it rips through that level. I take a little profit into the breakout if I can get filled. I'm not getting filled as much as I was hoping. So it hit a high in the, I don't know, 70, high 70s or 80s. But I can always get back in. So now I look for a micro pullback, let it prove strength. Now it's back to 75. So if I was short and I was still holding, I would be getting a little nervous. In the Warrior Pro classes, we'll talk about short selling strategies, and it's important to learn them because then you can be thinking about, if I'm short, this is where my stop is. So since I'm long, or I have maybe a long bias on the stock, I'm going to be adding where shorts are stopping out, or I'm going to try to expect where shorts are going to cover because that's going to probably fuel the next leg up. So high a day is an important spot to watch. Therefore, I add for the break through the highs and looking for that kind of parabolic panic squeeze through 10 to the upside. Okay, so a little resistance there, but taking some profit off the table, now up 20 grand on this stock. Okay, let's back that up a second. So in this case here, you can see how we had a little churn between like 970 and 10. And then once it really broke out and held over the psychological resistance and then support of 10, look at all those green orders. So now we're seeing some momentum. Now it's starting to pick up speed. I'm adding at 25. There's 40. I'm adding at 45 for the break of 50. There's 70. I take a little off the table with 40 cents on 16,000 shares. That's a $7,000 winner. So taking some off the table. Now I'm willing to add back if it can hold here. I add back there at 69. Now I'm looking for 11. Halt level is 11.29. We'll talk about halts in the next chapter. And look at this. Whoa, up over 11. And check out, what do you see on the bid at $11? A 44,000 share buyer. So now we're seeing a 44,000 share buyer on the bid. So we're definitely seeing either someone wanting to buy a big position for a move higher, or possibly someone who's short who's needing to cover. All right, so it goes up to 1164, it looks like. It then pulls back kind of sharply here. And let's look at this. Now this one is currently up 300%. The high, it looks like it actually got up to just over 12. So see right there, once again, we have resistance at the whole dollar. So it's hitting that $12 spot. Needs to break through that level. I'm in at 85 with orders that looks like at 91 to add. There's 12. Is it going to break 12.10? Whenever I'm trading around half dollars and whole dollars, I like to see, a firm break through that level. So I want to see this over 12.10, then 12.15, 12.25. This right here is not really the clean break that I wanted. And this could present a challenge if this drops down, because now all of a sudden with 20,000 shares, I could be looking at a 50-cent loss, which would be a $10,000 loss. So this is a false break of a whole dollar. But because it's so bullish, I hold on to it. And just like that, look, back now up to 12.40. So is it going to break through 12.50? In this case, I actually hit the bid because I was a little nervous and knew how top heavy it was with a green doji there at the high. It pulls back, so I'm out of it for now. But look, this thing is holding up. So dips are getting bought up and it keeps rallying higher. So how high is it going to go? And we never know. Maybe this is the top right here and it's going to fade for the rest of the day. Heck, it's up 338%, 30 million shares of volume. Maybe this is the top. There's no actual news on it. It doesn't really make sense. But clearly it's strong. It's providing us opportunities. So right here we have 12 on the ask. I'm in at 1179. Seems like it's consolidating here. So kind of trading around this area, making a little, not a lot. But we know our high is around 1250. So if it breaks through 1250, the next target would be 13. Uh-oh. There we go. Holy smokes, look at that. Right up to 13. So what we're doing is we're trading around half dollars and whole dollars on a stock that is incredibly strong and that is experiencing what we would call a parabolic short squeeze. There's 1320. I'm up 44,000. Now this is this is not going to be the best day I've ever had. This is a good day. This stock is giving us some fantastic opportunities. And look at that. Look at that, up to 14. Look at that, 1430. So when stocks start doing this, this is what we would call, I mean, this is the definition of parabolic momentum. It's almost just skipping, it breaks a half dollar and goes right to the next one and then starts skipping over half dollars and whole dollars. It's just going straight up. It's unstoppable. So we're at 1466 and let's watch this again. So let's see. So there's 16, there's 17, there's 1829 on the ask. And this would be the type of stock that would be hard to trade just based on the chart alone because of how quickly it's moving. You might feel like, where do I possibly, how do I manage, where do I get in? Whereas the level 2 helps provide a little bit more context. So we're going to keep watching this. And it keeps halting going up. You're going to learn more about halts in the next chapter. There's up to 25. I'm up 68,000, but holding 3,000 shares. I'm up $73,000 on the day. We're looking for the next resumption here. All right, so let's watch this. There's 30. I'm up 79,000. Now I'm all out because I'm just saying, man, this thing's just going so high. I don't know. I don't think I can get back in. It's too expensive. It's too risky. So let's watch. This is going to squeeze up to, there it is, $38. $38.04. So, I'd love to get back the 10,000 shares or 17,000 shares I had at $7.50. But you never know how high stocks are going to go. And so while it's probably true that someone, on a Reddit forum will make a post that they bought 5,000 shares while they were on their lunch break, driving a UPS truck and then looked back and it was worth 200 grand, that's not going to be something that you should compare yourself to or necessarily aspire to because your goal most likely is to try to generate some consistent profit and not to try to hit, an occasional home run through a lottery ticket type of trade, which 99% of the time lottery tickets are probably, worthless, right? For every one person that strikes it big that everyone hears about, there's so many others that have really nothing significant to show for that. So, all right. So I think that certainly is a good, it's a good example of some parabolic momentum, which is kind of a cool thing to watch. We've got another one that's going to start up right here on RHE. So I'm currently up 79,000 on the day. RHE is moving very quickly and is approaching the next whole dollar of 5. So this is a stock that's already gone from 2 to 3 to 4 to 5. It's very volatile, but I'm looking for my entries. So I dial it in, looking at the high a day, looking at the chart, then looking at the level 2 and the time in sales. Lots of green on the tape. It's surging up, so I take a trade there. Looking for the move on this up to, look at that, 533, 534. So on this one, initially, that right there is a potential $4,000. It goes up to 572. Now I'm going to increase my max share size on this, I think. I don't remember putting it up to, or changing it to 30,000 shares. So that's now halted at 571. Realistically, I didn't actually make all that much on it. I sold it fairly early, but let's go ahead and jump forward. So we're at 571. We're going to move forward another 5 minutes. Let's see, 27. So we know, these are obviously some very volatile stocks. So look at this. Oh my goodness. So I'm in this here. This has now had a high of just about 7. I'm holding 15,000 shares at 681. I'm looking for the breakthrough 7. I'm adding for the high of day break, target 750. If it breaks 750, next target 8. Half dollar, whole dollar. One of the things that you'll notice, and I've already mentioned, is that usually my winners are clustered together. So on a day like today, there's $89,000 on the day. I'm being really aggressive. This is a day where the market is hot. When it's hot, I step up to the plate. What I'm not good at is stepping back when it's slow. I often try to keep trading aggressively like this, aggressively reading the level 2 in the tape, even when the market's cold. And when the market's cold, I experience unnecessary losses because I expect moves like this, and I just keep, getting nailed on these, big drops. So it's always important to try to be mindful of the current state of the market. And I say that for myself just as much as for you, because ultimately the current state of the market will dictate whether or not this is a market to be aggressive in, or this is a market just to kind of, hit your small base hits and lock it up. And, today's a day where I've got, 8,000 in this account and 26 in this account. This is, or 17 in this account. It's a good day, 25,000, but I kind of made the most I could today. I don't think if I kept trading, I'd really have made a lot more money. The things that I was looking at have all kind of slowed down a bit. And you never know when the top is going to be for the day, for a stock, or anything else. So let's look at this again. All right, so now I'm watching the green. And of course, on a stock like this, we're seeing a lot of green because we're just seeing crazy momentum. So lots of green. Look at all that green. And I'm just adding. I get a little FOMO myself. I jump in and I start getting aggressive. I'm now looking for the move to 8. If it breaks 8, then 850. So now I've got 30,000 shares long at 767. I add to 38,000 for the break of 8. I take a little off the table. We know that false breaks are not uncommon at half dollars and whole dollars. Then let's see if it comes back up to 8. If it can break 810, that's where I'd size up a little bit more. And it does break 810. It goes to 820. Now 830, 840. Up to 870. And I'm taking some profit off the table, but holding right now, it looks like 15,000 shares. So let's jump this forward a little bit more. So sitting up 133,000 in one day. Now this is certainly, these types of profits are, that's $10 on the ask, and you see a 13,000 share seller at 10. So can we break through 10? Yep, broke through it. I have an order on the ask right now at 52. I got a partial fill on it. So, when the market is like this, when we're seeing stocks that are super, super crazy like this, I obviously try to get aggressive. There's definitely more risk, but these are the type of days where realistically, I had I think it was 2016, maybe it was 2017, but I can't remember. But in one of those years, I believe I had 3 individual days that contributed about 30% of my total profit on the year. On the whole year, 3 days. And that's why I really try to show up every single day, because you never know. We can kind of say that when the market is generally pretty hot, that it's probably to be expected that we're going to see pretty good back-to-back days of decent trading, and maybe we will see something explosive. But it also can be the case that when the market's slow, we just kind of get through it, but we show up every day because you never know which day out of nowhere you're going to have 2 stocks like this, that one goes from $7 to 38 and the next one goes from $2 to 11. And so let's go back to what we said, if you recall, in chapter 2. So, we're at a point in the class right now where I'm hoping that the pieces are starting to form a picture and your understanding and being able to kind of visualize what's happening in the market and the opportunities that we have in the market. So I'm just pulling this up here. Let's see. This was chapter 2, part 3. Hang on, sorry. Okay. So let's go back to chapter 2, part 3, picking the right stocks for trading. If you're trying to read the tape on stocks like, RHE, that doesn't really have high relative volume today, most likely, or stocks like Apple, you could read the tape on it all you want, but a lot of these orders are those high frequency trading algorithms. This is not going to generally, these orders and what you're seeing are not generally going to be in super big indicators of what's going on, or an indicator to jump in or to jump out. But when you're focusing on the right stock to trade, a stock that we know is experiencing kind of this heightened level of FOMO, because what's going on RHE in this video is clearly FOMO, and I'm falling into it as much as anyone else. I mean, this thing is crazy, and I'm going to be aggressive, and why not? It's up 500% and it keeps going higher. So these are the days where we have the opportunity to try to capitalize on this volatility and essentially capitalize on the extreme levels of emotion that are in the market. But we have to be really careful not to fall victim. So I'm sitting up $154,000 right now. And look at this, squeeze through 13. So at this point, I'm just continue to trade it. I fully expect that I will take a good size loss at some point, and I will give back some profit off the top. I don't know when to stop until I have that first big loss. So I actually trade this, and look at that. I think this is going to be my high a day right up around here. Unbelievable. I'm holding unbelievable. So, pedal to the metal when things are hot, but understanding that former Momo status, the high relative volume, the retail versus institutional traders, the supply and the demand, and being able to feel fluid and in that flow state while you're trading, that's what we aspire to. Now, again, some of you may not end up going all the way down the path of trading at that level that I trade at, which is very aggressively with large share size, in and out with hotkeys, reading the tape, glued to the computer screen. Some of you may take a more hands-off approach. You may learn some of the patterns that I'm teaching and say, hey, you know what? I'm actually seeing some of these same patterns on the daily chart on some of these stocks. First daily candle to make a new high, flat top breakout pattern, pullback pattern. And you can certainly apply these patterns to long-term trades and investments and swing trades. There's no doubt about it, and many people do. You can trade on whatever time frame you want. So you could slow it down to the 5-minute and be a day trader. You could slow it down to the 15-minute, the 60-minute and be a day trader. You could slow it down to the daily chart and be a swing trader. It depends on your risk profile, your aptitude for kind of the speed of trading and the risk involved and everything else. But my hope is that regardless of which place you find yourself in, that you'll feel that you've gotten really good value out of what you've learned through the starter, as of where we're at now, but certainly, of course, by the end of it as well. So, all right, so I'll move that back over here. So I think that this is a pretty thorough analysis of reading the tape. And again, I wanted to show these live trading examples only after we finished the tape reading, because it's not just the level 2, it's the tape. They go hand in hand. I wouldn't ever look at one without the other. I always look at them side by side. So we've got the level 2 and we've got the tape. And yeah, so some good live trading examples. Obviously, examples like that are uploaded in the live trading archives for Warrior Pro students. And why don't we continue on here into chapter 11, where we're going to talk about stock halts, which is good because what you just saw in ACY and RHE were examples of what are called circuit breaker halts. All right, so let's go into chapter 11.